What it do? Train the Trader here. This is my very first recording, and I was inspired to do this by a book that I was listening to, Psychology of Trading. Um, I'm really doing this to increase my skill set when it comes to being a trader. So, in the book, they talked about journaling, whether you're writing it down, or in this case, I chose to record so I could see charts and explain what I was looking at in my mentality when I'm taking these trades. So, the idea here is just to be accountable to myself so that I have a premise of my trading patterns. And hopefully, as I continue to grow in this, people will watch this and maybe learn from my mistakes or learn from my successes as well. And so let's just get down. My very first one that I want to break down is Microsoft. A play on Microsoft that I eyeballed over the weekend when I was just doing some basic back testing and charting, something I normally do. So let's get to it real quick. So this is the Microsoft chart. If we expand this out over 3 years and a day, what we're going to see here is a couple things. So this purple line right here is what they call a exponential moving average. This one is a 200 exponential moving average. This is a major moving average in the industry when it comes to technicals because a lot of, I guess, firms, professional traders use this as a bullish or bearish sentiment indicator. So if the price is above this 200 EMA, like it is right here, like it is on this whole chart, then it's safe to say that we're in a bullish trend. And bullish meaning price going up, as you can see by the candlesticks here going up. My price over here on the right hand side will correlate with the candles. So right here, price is 367.39. Makes it easy to understand. But what I'm trying to get at is the 200 EMA, we're above it, so we're bullish. The yellow line you see here is my 9 EMA. This is more of a quicker reacting moving average. So it tracks current prices a little bit faster than the 2MA. I use this as support and resistance sometimes and crossover moves. So whenever we get prices that cross over the, like in this case right here, crossed over the 9 EMA, went on a little bull run. Below it, drop down. Cross below it, bearish move to the downside. Cross below it, bearish move to the downside. Cross above it, bullish move to the upside. So I use this as major professional traders use it as well for indicators, maybe entry, exit points if you're in a trade, things like that. So looking at this chart, you see these highlighted areas are support or supply and demand zones. I had charted this demand zone right here based off of the rejections to the downside. We hit down right here and took off to the upside. Came back, tested it again, took off to the upside. Came back, tested it again, and I saw this candle right here on March 11th. Just bounced off of that major demand zone that I previously charted. So I'm anticipating a continuation to the upside because we're above the 2MA. We're looking to cross this 9 EMA to the upside, which indicates a bullish move. So I placed the trade at the end of the day on this day. Price range right around 404. And I bought a 412 call because I'm anticipating the price to get back to at least this last resistance zone here at 417. So I bought a 412 call. It was within my funds, made it happen, right? So let's talk about risk management. My risk management on this particular setup was very easy to see. Since we have this demand zone, I use the low of this March 11 day right here, which is right around 401.38, so call it 402 as my stop loss. So that was my max risk when I placed this trade. If the price was to retrace back down to the downside and hit 402, 401.50, I'm automatically getting out of the trade. That's my risk. That's how much I would have been willing to risk in this trade. Because my upside, the other side, the reward was so much higher. So we have a potential risk of $2 as opposed to a potential reward of, if we go to the high of this candle here, 417, that's at least $13. So we're risking $2 to make at least 13. But if we're trading options, obviously that changes your payout. Your rewards are a little bit different. The payout's going to be a lot more than $4, $14, things like that. So if the price was to go from this 404 to the 417 area like I anticipate, then a trade or an option contract that cost me $350, right, with a potential move back up here, can net me a profit of at least $350 while I'm only risking about 100 in my loss. So my risk to reward ratio was favoring higher reward, lower risk, which is a plus setup for me. So I bought calls. Now, before I got in this trade, because mind you, I placed this trade at the end of the day on Monday, I was looking at Microsoft on Yahoo Finance. So I wanted my fundamental analysis to support my technical analysis. So what do? I go in here and I'm looking at revenue quarterly. I'm looking at revenue increasing, good sign. Operating income increasing every quarter. And I know just from being involved in the market that AI right now is a big thing and it's contributing to a lot of these bullish runs in the market. Microsoft is right there with them because they're heavily involved with OpenAI, which is a AI software online that's just taken off. I think it actually set records when it came to amount of users. That might have been Chat GPT, but OpenAI and ChatGPT both booming right now, and there's profits and money to be made from all of that money coming in and users now using the services, both personal and business. So I have technical analysis supporting my move. I have fundamental analysis supporting my move. So I was confident in placing this call. And of course, overnight it gapped up a little bit and then went on a run and then continued that run all the way until Thursday. So not only did it hit my 417 target here, it went well beyond that up to 427. So I took profits on this day, made really good money. I think I ended up closing my contract for about 70% profit, which is great. And if I would have held it, look what I could have gained. Probably close to 200% in profit. Hey, can't win them all, but green is green in my book. So I love this trade, love this setup, and looking for more just like it. Hope you guys enjoyed this. For me, listening back to this later, I'm not even sure if anybody's ever going to hear this. But for me, if I'm to reference this down the book, this could be, just one of those confidence boosters if I take a loss on a day. But also, like I said, it's journaling. So I'm tracking my progress through this whole skill set that I'm learning. Use some of the things that I learned to be able to come up with this trade and the ideas behind the trade. And yeah, looking for more like it. And there will be many, many more. Hope y'all enjoyed it. I know I did. Love it when we make money. But win, lose, or draw, we're locked into this market for the long haul. Peace. I'll holler at y'all next time. Train the trader out.